At the edge of the trading floor. Thank you, Todd, for joining us today. I appreciate that. BubbaTrading.com, and thank you very much. Let's take a look at this grain trade. We're seeing support in the corn. We're seeing some support in the soybeans, even though it's kind of been chopping around, and also in the wheat trade, but not so much in the Kansas City wheat. Help us sort this all out today. Why the positive attitude?
Hi, Marlon. Well, again, I think we've been watching this for months, and we've seen the effort of trying to punish these grain markets and push them lower based on whatever factors, and the bad news is really already priced in. So every time we come down to what I would call a reasonable level of support, and that's 370, 375 in the corn market, we get a little bit of a bounce and look for possibly a run back up to the $4 level. So soybeans now we're trading January versus Nov. So Jan, 875 to 880 looks to be very solid, and wheat around $5 always looks to be a play. And if you follow those guidelines that we heard right here on RFD, we would see that those have been pretty good levels to continue to buy on a regular basis. I don't think that you want to be a seller here. I think if you're a producer, you want to hold or be hedged. At the end of it, the market's beaten you and thrown you every curveball possible to indicate these things go much lower, because the rest of the commodity space is getting slaughtered out there, yet we've been able to hold our levels pretty tough here. And I think any news that will come in can only be favorable now from where we go from here. So I think we look for higher prices. You want to use those levels of support. It's not going straight up, but I think at some point you're going to see a nice rally, and then you have to look into watch the levels on the way up and where you want to start to sell and peel off.
Do you look for much market movement, though, ahead of the USDA report coming out on November 10th?
Oh, I think you'll see some movement. Again, you'll see. Remember, we're now, for whatever reason, we're now inextricably linked to the Federal Reserve as well. They've now linked in every market to what happens in the equity market and with the Fed. So I expect to see some movement. Could it be wild? Sure. Look, there's always somebody who's willing to step up in front of a report and take a flyer one way or the other. So I wouldn't be surprised if somebody anticipated, and you could see, I would see if there's going to be something that would be more likely of a rally going into that report. But certainly there could be big action if somebody wants to step up and take a gamble play here.
All right. Well, Todd, we're going to pause for a short break, and when we come back, I'm going to talk with you about this whipsaw livestock market as well, because that one can be hard to figure out. We're talking with Todd Horwitz. We'll be back right after these messages.